So today we are going to discuss about company. So what is company? Company is an association of persons who join together for doing business. From company is a Latin word which means with, together with. So according to Indian Companies Act 1956, a registered association with an artificial legal person having an independent legal entity with purposeful succession, common seal for its signatures, a common capital comprised of transferable shares and carrying limited liabilities known as company. So characteristics of our company: voluntary association of an individual is called. It's also a company. It must have a separate legal entity. It will be an artificial person. It has a purposeful succession, common seal, limited liability, transferability of shares. Types of company. The companies are categorized as incorporated company and unincorporated company. So incorporated company is a company which is registered under Indian Companies Act. Unincorporated company, those not registered. So incorporation is a legal process of registration or form of corporate entity. Advantages of incorporation: if a company is incorporated, it must be a separate legal entity which enjoys similar legal authority of a human. An incorporated company has an unlimited life. Ownership of a company is transferable to new owners, and the liability of the shareholders are limited. Incorporated companies are categorized as chartered company, statutory company, registered company. So chartered companies which are created under British monarch. Statutory companies are created under the special act passed in Parliament or state legislature. Registered companies are registered under the Indian Companies Act or any earlier acts. Registered companies are divided as limited companies, unlimited companies, and government companies. Limited companies are the companies those liabilities are limited by its members. Unlimited companies are the companies which have its members' liability is unlimited. Government companies, the state or central government owns the 51% of the paid up capital is known as government companies. Limited companies, limited by shares. Private company and public company, limited by guarantee. Limited by shares, the members' liability is limited based on the members' shares value. Limited by guarantee, the companies the unpaid amount of shares plus the amount guaranteed by the private company. Those companies which are not offered its company shares to the general public are known as private company. A public company is a company whose ownership is distributed amongst the general public as shareholders through free trades of shares or stock exchange or over the counter market. So the difference between private and public company based on the meaning: the private companies are wholly owned by its investors, management and holders, etc. Public companies are part of the shares by general public stock exchange. Private companies are not stocked in public stock exchange. Public companies must be traded in stock exchange. Reporting regulations: there is few regulations only available for private companies, but public companies have, as per SEBI, very strictly follows the company's reporting regulations. Information: there is no information available for general public. Primary as well as security data are available for public companies. Social fund: through their friends and relatives and debts and financial institutions only they collect the financial needs, but public company they collect through equity, debentures, IPO, bonds and commercial papers, etc. Size of the private company is comparatively small and public company is comparatively large. Valuation: it is difficult to value a private limited because Due to this lack of information, public company is valued easily the availability of information. Private companies are highly controlled by its owners or management. Public companies are having a lack of control due to its high members. Formulation and dissolution. Private company was easily formulated and lesser regulation regarding it. But public limited company have a lengthy and long procedure for creation, formulation as well as dissolution. Books maintained by companies are books of accounts, statutory books and statistical books, books of accounts, receipts and expenditure book, purchase and sales book, assets and liabilities, and utilization of materials or labor or other items. Statutory books which have to be mandatorily maintained in companies are Register of Investment, Register of Charges, Register of Members, Register of Debenture Holders, Minutes Book, Register of Contracts, Register of Directors, Register of Director Shareholdings, Register of Investment in Stock Debentures. Statistical books, Statistical Application and Allotment Book, Share Calls Book, Share Certificate Book, Debenture Application and Allotment Book, Debenture Calls Book, Register of Share Transfers, Dividend Book, Debenture Interest Book. Classification of equity share capital. The share capital authorized or nominal or registered capital. The maximum amount of capital that can be issued by a particular company is known as authorized capital.